Friday, November 17th, the last Friday before Thanksgiving week, and I will not be able to do my YouTube next week, Thanksgiving week, spending time with the family. You guys know that I start out with this market analysis, YouTube, with the stock market indexes. And I'll do the same this morning with the December E-mini futures contract. We've lost upside momentum at the moment in overbought conditions. That's why the bars are yellow, custom code, ER signals. Up against a resistance area, which was Wednesday's high, and this morning we came very close to it again. Currently a little below where it opened, and again we're at 10 o'clock California time, slightly below where it opened and almost dead unchanged. Any slippage from here is going to start to be a new low close for 1, 2, and maybe just a little bit more at today's lows. A new low close since that big up day with all the bullish news on Tuesday. So most of the response to the producer consumer price index was on the day it came out. No surprise. And it got overbought. So I think still we're about to have that dip I'm looking for, down to approximately 44.35. And this is a Christmas contract E-mini. It is the first downside objective, and I cannot rule out, a little bit lower during the next approximate week or so. And then up to probably new highs around the turn of the month into December. Then we're going to have the Santa Claus rally, which is buying just before Christmas. And typically speaking, although I have a new twist to it, letting go in very early January. But that's the very, very generalized Santa Claus rally. Some people just say buying before Christmas and selling into the new year or something, or early, whatever. We have a, excuse me, pinned down to the exact minute and date. Next, we've got it. Next, come on. Okay, we've got the spider, same story, up against some resistance, not really as specifically as December E-mini, but nevertheless, same situation, overbought most importantly, and there is a gap to close. In fact, this is extremely rare, 4 gaps to close. Now, the lowest one down here at 418, we're not going to get back down there. And the one down here at 426 down to 423 or so, I don't think so either. Now, the one that we have at 432 or 433, and that's the beginning of it, it's a little bit lower to close the gap. Let's call it 431, is not totally out of the question. Depends upon how quickly we come down and some other features. But anyway, the minimum downside objective I have on this minor downside dip is 441.5-ish, and then up to new high ground. Next chart. This is what the spider looks like in the last 3 or 5 days. There, of course, is the consumer price index opening extreme overbought conditions on a 1 minute. And then we basically reached where we are right now within an hour or two, and that's last Tuesday. So overbought conditions, failure to make new highs at the moment. And if it does, well, I would probably say the same thing I'm saying right now, just from a little bit higher prices. So I think it's about to turn down. Next is going to be the QQQs. There's a large gap to close because of the CPI on Tuesday. And I do think that's going to get closed. And it is a good area of support. And again, like the other indexes, I can expect a little bit more weakness, in this case down to 374. The gap, by the way, is closed at about 378.5. And then up. I doubt sincerely that any of these 3 other gaps about 2 or 3 weeks ago are going to get closed. Honestly, I can't rule them out completely, but it looks like it's a bit too much. Next, NASDAQ futures, because it's a futures contract, they don't gap very often. They're open much more percentage of the number of hours per day. Anyway, kind kind of like forex. Same thing, overbought at resistance, looking for a correction. Okay, you know how I feel about the stock market indexes at this point. And the DIA has a big gap to close at 344.40. It had a bearish engulfing yesterday. Official ER sell signal turned the price action red. This morning we opened slightly above our offer. We are short, specifically at 350.81. The DIA, because of our automated sell signal. This is what it looks like on a 1-minute chart. Because it opened, as I said, slightly higher than previous day's close above our trigger point, where our or better offer was filled, and so far, so good. 81-cent profit momentarily, not quite a full point. And this is the DIA. Next chart. We've got the Russell 2000. Oh my gosh, acting exactly like a head and shoulder bottom should. Yesterday, just because it closed relatively close to its lows does not mean it won't go up today, which it did so far. Opened significantly higher and actually made it up to the high of yesterday, which is the highest close basically for the rally. And today, yesterday, and 3 days ago's highs. Only one day during this week we've seen on Wednesday overbought conditions closing an old gap. That was the high of the rally. It turned right around, went right back down to the neckline, which is almost right out of a textbook, as I think I mentioned yesterday. And open significant. What can I say? This one is acting perfectly so far. The minimum upside objective on the pattern is 189.75-ish. So what can I say? I'm not changing my opinion. Until things start screwing up, then it's working. Next. The Russell 1-minute chart, and looking really good. Just need to get a little bit higher than that little resistance area that showed up in particular in the last half of Wednesday. Okay, futures. We've got the same but a different perspective E-mini continuation chart, and bumped right against resistance. That's based on previous rally highs and in some cases previous lows, but a price level at which market rallies or breaks tend to stop moving up and down. And it did it again. This week early, which was Wednesday, that's the high of the rally, right smack against resistance, and it tried to do it again this morning so far. And currently we are just barely hanging on to any profits or rally whatsoever. The spider's up 0.19. The Qs are literally at unchanged, and the DIA is already down at $1. That's the only one, the DIA, that gave us a sell signal, remember? The rest of them are trying to and could, in some cases today, if it gets below yesterday's lows. I like what I see in terms of my top idea. NASDAQ, same thing, talked about it. Now, bonds, new high for the rally. We caught the bottom of the market with our green ER buy signal, point blank. That's the last major sell signal we got, way up there, almost at the top, almost. Too bad. So currently higher on the day by a slight bit. Last time I looked, it was a little bit lower on the day, and I'd like to see that actually a little bit more. I'm expecting that if it starts to slip, which it could, that it's going to help the indexes work lower, stock indexes work lower. This support level is unbelievably accurate. I can't believe I can tell you that the low 4 out of 6 days were exactly the same to the tick, and 5 out of 6 were almost the same. So I haven't seen that. I can't remember. Ridiculous. 112.12 is the number for the bond continuation contract. New highs today, maybe a new high close. It's stalling out. It's running out of gas. It looks like it's about to flip back down, possibly to 112 again, but in the ballpark of, and then turn up. Next chart is 10-year notes. It tried to break out of its head and shoulder bottom today. It rallied above the neckline. Now that is the breakout, but this is what happens sometimes. You have to stay above the neckline, especially on a closing basis. That's a legitimate breakout. If you drop right back down below it again, you've got yourself a little bit of a bull trap. You've got a false breakout. And that's exactly what we have at this moment. So watch out. If you're long bonds, we could have one more correction. I've been mentioning the fact that there is two little lows here on October 4 and October 6. So why couldn't we have two little lows here? The first one's already been 11.13 this month, and maybe in a day or two, down to about the same. But anything higher than that's acceptable. Just watch for the close above the neckline for the major upside breakout. And we're often running up to a minimum of 112.07 if the pattern works correctly. Next chart, crude oil. Rallied to resistance a couple of days ago, the middle of the week, Tuesday or so, and boom, new low ground yesterday, but it got oversold in the process and in an area of support. So here's the rally today so far, doing extremely good. As a matter of fact, I think it just made a new high that just last tick, but it's right at the moment high and last. It's probably going to run out of steam, and it might even get back up to 80.15 again, but I'm expecting to see it dig into this support area, which is the bottom of which is 66.60 or so. And we can see if we can get down there. Next chart is natural gas. It just dropped totally in new low ground, except for the last low, which was on June 1st of this year. And it is very, very close to oversold again. So we are probably about to turn back up. It might make a little bit of a new low, a lower low, but it's how it closes relative to that previous lows, which was at 1 point, I'm at 2.9. And we're 2.919 at the moment, so it's super close. Let's see what goes on here. Next chart. Heating oil is actually rallying a little bit today, but this has a head and shoulder top still. It looks awfully good. I have no problems with a little rally today. Now, I really don't want it to get above 2.88, 2.89, especially if it closes above there. That's already been a test of a little support resistance area. And that looked good in terms of a turn back down. I mentioned the bearish engulfing yesterday, and it did make a lower low, but right now it's a little bit, it's back up into the middle of yesterday's range. I still think it's about to break out to the downside. The downside objective, if that's true, is going to be 2.12. And the head and shoulder top should break out to the downside in the next several days. I'm thinking the next week or week and a half at the longest. Next chart, gold. Got the top of the rally, got the bottom of the market. We got the bottom of that break. We got the top of that, to the day, top of that rally. We have an extremely good bottom of the market back there and the top of the market back there. And that has all been since February of this year. Precious metals have been just great for the ER signals this year. I think it's going to run out of strength. Probably right in the ballpark of today's high, and top 25%, I think, of today's high. Already it's lower on the day. Already it's flip-flopping back down a little bit. And I would not be a damn bit surprised to see it next week down to 1935 or lower. I'm bearish at the moment, but I have to realize that there's a chance of a much larger bottom formation, but right now, next few days, I think it's going to slip off a little. Next chart is silver. Another higher high and a lower quote right now. Minor reversal in progress, almost overbought. Okay, I think that's it. Probably this is turning down. Next chart, platinum. Oh, same thing. All three are exactly alike in a variety of reasons. Now, platinum has got a lot more resistance in the ballpark where it's bounced up to just in the last few days, but it got oversold. So a rally of some sort is not surprising, but it did it. Now what? Looks like that could have been it. Today's high, and I would not be surprised to see it next week challenging the 841, 842 area next chart. High grade copper, different story. We've got a minor lower low than yesterday and stronger on the day, and maybe even a bullish engulfing. Looks like it to me. A mild one, but nevertheless. And that implies it could rally a little bit more, but there's more problems overhead than support below. So I think it's going to fizzle out pretty quickly, and we're not too far from overbought. So don't trust a rally at this point, in my opinion, in high grade copper. Looking for sell signals. Next chart is soybeans. Well, we're still long, and we're not liking the last couple of days down, but we do have a small profit locked in. Let's see if it stops breaking and turns back up. We do have some support a little lower than we are right now. We got the bottom of the market to the day. We got we got almost the high of the market on July 27th. We got an excellent trade out of a rally, but this ER signals is developed to pick the high and low day of minor and major trend changes. So minor ones are making money. That's good. Next, bean oil. We got the top of a double top, which turns out the double top to be the head of a head and shoulder top, which turns out to have a downside objective of 50, which turned out to be true. 2 weeks ago, we hit 50, actually 48, 60 something, and rallied and got us out of our, what was a 2-month short position, 2-month plus. Whopper of a great trade. We're now a little lower than where we offset our short, but it's a minor reversal today. This could be building a small bottom. I have to wait a little bit more time to be a little more decisive. Next chart is meal. Overbought conditions. We're now finally out of it after a few days. Support starts at 150-ish, 148. So I think we're easily going to get there, as I've said before, I'm sure, and maybe even down to 120. But the trend for an extended period is potentially up. And that implies watch for buy signals on declines and in maybe support areas, etc. You could use fib numbers. You could use a variety of techniques to try to pinpoint price levels at which markets turn. That's about the best I can say. I realize it looks like a double top could have formed, but it's way too early to say that it's a double top. I do like the fact that it's overbought on the second high, so let's not rule that out. Get rid of that. And if I do start to turn bearish, and not yet, then the minimum downside would be 364. I'll say that much, 365. Next chart, corn. We're looking at corn's going to go the way of wheat. I've been saying that for weeks and weeks. Here we are dropping like a rock, and there's not much support. We're right at the last support. Anything significantly below low and last, the way we are right now, at around 468 exactly, on this continuation contract for corn, would simply get more and more bearish. Now, I don't look for necessarily a really big, fat, fast, hard crash, but I do have to point out that this line that I drew, this big dash line, is an old support area on the continuation contract back into May of 21, 2.5 years. So it could still stair step its way down. I'm not looking for a hard break. I'm looking for stair stepping its way down. Next chart. Wheat, same thing, done it there. What can I say? Looks like it's just about to make the next stair step down. Next chart, cattle. A little bit of stair stepping here, but it's only for a few weeks. I will mention, hey, we got the top, and we got the top, and we got the top, and a secondary signal. Worked out okay, but that's the one you love. And that's almost a high, and that's almost a high, and that was almost a low. Bad signal here. I'm looking for lower levels. This market has lower highs and lower lows until that starts to change and or something else develops. I would expect a risk move down to 172 minimum. And that looks even better, 166.80. Next chart, live hogs. Last trade was a good one, going sideways since. Tendency to be topping out here since July. Rallies have not been able to maintain, and they've been a little bit lower than each other, including the last one only a couple of weeks ago. And we've had lower lows since. So I got to expect to see 72.5, 73.5 in next week at least, and maybe even down to the next significant support area, which would be something in the 70 area. No, a little bit below 70. Next chart. OJ. Well, doggone it. That bearish engulfing, which I thought might be the high for a long time to come, wasn't. We did get an excellent trade out of it. That's really the bottom line, huh? And it just broke down like crazy immediately after the signal. But oversold conditions turned it around. Now we're overbought again. And we saw a new high for the whole trend, but it's up against the old bullish resistance line, which is the top of an up channel. And it's not staying above the old historic high, which is the high of the key reversal. Very close to where it even opened, which was gapping up. And it could start to slide again here. It already did it, opening, making that high. I know it came down to hit the low. I watched it for a little bit and then came back to give or take where it is. So there's a good chance that the overbought conditions and a failure to stay above the old high just might result in a double top. We'll see. No commentary than that. Cocoa, bearish engulfing 3 days ago, but we are on the verge of maybe getting stopped out of our shorts. Not quite yet. Don't like what I see. If you are very convinced that the signal is going to be good and it's about to top out, this would be an extremely low risk, because your stop should be in just a little bit above previous tops, probably. Very low risk trade. Gutsy, yes, but nevertheless, if you boo-boo, it wouldn't be too bad. Won't break the bank. Next chart. Coffee dropping off. Generally got up to some resistance. I didn't even draw it in because it was kind of sloppy. Probably starting a downside correction. I think the first really decent spot would be about 155. Don't have a lot of confidence. Next chart. Sugar. Slowly rolling over here. Looks like it's something is developing that's on the bearish side. Can't be sure. Kind of pass on any major judgment there. Cotton. Oversold. Bottom of the support area. One of my favorite combinations. Turned right around the last week. We're almost at a new high. A new high close seems likely. Doing pretty good. How far is up? Well, as I've been mentioning, more likely, say 83.75 minimum. But I can't rule out going all the way back up to where it's been bouncing around between a rock and a hard spot again and again and again. So I like what I see. Next chart, going to be E-mini, great resistance, stalling out, although actually at the moment rallying very slightly. You guys have a great weekend. Profitable trading to you.